David, we've seen the rand coming under more pressure today, and it really appears, as Alicia said, to be following that euro weakness against the dollar. Would you agree with that?
Well, I think a couple of factors, Stephen. The sentiment sort of turned towards the rand when we had the interest rate cut announced last week. Some positions were taken off the table, and subsequent to that, we have seen global markets softer. Equity markets, some positions being taken off there, and real equity market softness coming through today. And on the back of all of those factors, some risk aversion creeping in, and the rand up towards the 820 level.
Do you see this as a temporary bout of risk aversion in the market, David?
I'm not so sure, Stephen. What really concerns me is tomorrow's release of GDP numbers. I know we're expecting slightly better than the last one, but if one just reads into the MPC statement as they came out with the interest rate cut, I got the feeling that they were really concerned about GDP growth, really dovish if one takes into account that it's not that long ago that the good governor said that the interest rate cut cycle was over. So I'm a bit worried that perhaps we could get a bit of a shocker tomorrow on the GDP front, and that might in fact be the catalyst to drive the rand somewhat weaker.
Of course, we are looking at a consensus figure of about 3.2% contraction for the second quarter. Do you think it could be worse than that the Reserve Bank has some information that we've yet to see tomorrow?
I think the potential is there, Stephen. If one looks at the retail sales numbers that came out last week, the manufacturing data that has come out, there's no doubt that our economy is really struggling at the moment. And I guess, the potential exists for a weaker number to come out tomorrow.
Now, what happens if we get a better number, better than that minus 3.2%? Do you think the rand would strengthen, or do you think it would just limit the losses for the currency?
Well, the rand is caught between two fronts at the moment. That's, what's happening on the domestic market. But more importantly, currently is the global development. So I guess, it really all depends how the equity market plays itself out over the next couple of days, whether this is seen as just a bull market correction, or where in fact we get some steeper declines. But for the medium term, it's hard for me to really get very excited about the rand. We've got some challenges on the front. We've got the labour market not looking very happy. We've got a disgruntled populace. We've got relatively high inflation in any case compared to the rest of the world. We've got very low GDP numbers and declining growth. We've got a current account challenge still to deal with. So on a medium-term basis, it's a bit hard for me to get excited about the rand's prospects.
David, perhaps just taking a look at some of the global factors that you said are influencing risk aversion and obviously the rand at this stage. We had some positive growth surprises coming out of Germany, France and Japan. At the same time, it appears that the UK, the US and of course South Africa are lagging behind here in the growth front.
Well, the problem is that the monetary authorities globally have thrown so much money at the problem. It would have been surprising if we didn't see some of that stimulus feeding through. It now is a question of does the real economy that's underpinning all of this, does that confirm what we're seeing? And that's the question that the global traders are asking now. We have seen equity markets run up very strongly since March. And do they have further room to go, or is it time to be cautious? And that's the question that needs to be answered.
Of course, the market shrugged off those weaker than expected retail sales figures out of the United States on Thursday. But those consumer confidence numbers on Friday appear to have been a very negative catalyst for the market. David?
Well, I think on Thursday, what we didn't see was just prior to the retail sales numbers, the equity futures, which were trading extremely well. They were looking very bullish on the day. That number sort of reversed the trend, and then the consumer numbers came out on Friday. That confirmed the weakness, that there's still underlying weakness in the US economy, and I think that's what's fed through into equity market weakness today.
David, you said you're not very bullish on the rand's prospects at the moment. How about other emerging markets and commodity-based currencies? How have they been performing in relation to the rand?
Well, it's almost, everything's in step at the moment as the equity markets move around. Commodities and emerging market currencies move with them. So all the emerging markets looking a little bit bleak. The rand perhaps bleaker than most. But, everything moving in step at the moment.
Of course, you mentioned the interest rate cuts on Thursday, which of course narrows the interest rate differential between us and our global counterparts for that carry trade. Is the market pricing in further interest rate cuts? Do you think we could get more interest rate cuts this year, David?
It would just depend how the economy plays out, Stephen. It's funny, a week ago nobody was calling for an interest rate cut. The good governor cuts the rates and suddenly we're calling for another one. So it depends on the data coming out as in the weeks and months ahead.
Where would you expect the rand to trade from here, David?
I think on the downside, towards 8 is very solid support at the moment. It's going to take a serious change of sentiment to drive it through that level. On the top side, we've got some resistance levels at 823 and 825. But I wouldn't be surprised in the medium term if the rand tracks towards 840, 850 in the next couple of weeks and months.
And how about the dollar? Because we did see the dollar weaken to 144 against the euro at one point last week. It's strengthened since then. Do you think the dollar's on a stronger bias at this point?
I think so, Stephen. I'm a natural dollar bear, but what we're seeing now is a sort of resumption of interest in the dollar. And that could be on the back of a relative strength play, that the US might in fact come out of the recession sooner than Europe, but that still remains to be seen. But it certainly seems that there's a good amount of interest in the dollar at the moment.